Online advertising companies are doing amazing today. Trade Desk is up 14%, Pubmatic is up 10%, and Magnite is up 8%, all thanks to Sandbox. And no, not this Sandbox, Google's privacy sandbox. On today's episode, what we're gonna do, we're gonna take a quick look at what happened, why are these stocks up so much today, and then we're also gonna take a quick look at some of the fundamentals and technicals for each of these companies. So let's get started. All right, so first let's try to understand what each of these companies have in common. All three of them are hitting the online digital advertisement market. Some of them are sellers, some of them are buyers. All right, so let's try to understand what this privacy sandbox initiative is. Google originally stated that they wanted to kind of phase out of third-party cookies. And for those not familiar with third-party cookies, is if you go to a website, you most likely hit accept cookies, accept cookie trackings. These cookies kind of allow the website to track your movement, what you're searching, what you're looking for. And in the long term of things, it helps a lot of these online advertisement companies because it tells them what kind of advertisements will best work on you and what would provide the best returns to their customers. So originally, Google had a timeline to kind of phase out of these third-party cookies by the end of 2022, but they say that it has become clear that more time is needed across the ecosystem to get it right. And I do believe this was a great move. Obviously, we all hate ads, but to some extent, advertisement is needed in this form of business. I mean, it allows a lot of freemium type content to come out and you just get hit with the ads. You don't have to pay anything else. YouTube is a prime example of this. So by doing something too early, it could overall jeopardize business models for a lot of companies. And in reality, if things go bad with this method, a lot of these freemium content can kind of move more into a premium content base. So with the overall extension, now they're phasing for the end of 2023. So they're giving companies an extra year to kind of be able to understand how the changes are going to impact the business. I mean, because the last thing you want is they remove third-party cookies because a lot of people are complaining about privacy. And the next solution or the next way advertisement companies start grabbing your information is a way even more invasive. It's great, right, for obviously the advertisement company, but it's also great for the solution. Now companies are going to have a time to kind of be able to come up with a solution that meets both consumers enjoy both in form of privacy and a solution that advertisement companies are also happy with. So now that we understand what happened, let's take a quick look at each of these companies. And at the end, I'm also going to take a look at their valuation metrics and see which one I prefer the most at the moment. But before we go any further, guys, make sure to hit the thumbs up, the subscribe button, and let me know in the comments below. Are you an investor of Trade Desk, Pubmatic, or Magnite? And let's take a quick listen to today's sponsor, a great reason why I'm able to provide so much free content to you guys right now. I want to thank the Motley for sponsoring this video. The Motley is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services the Fool offers. Through the Motley Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you'd like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the Stock Advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. So Trade Desk is traded under the NASDAQ as ticker TTD. This is probably the biggest out of the three we're going to see, a market cap of $35.7 billion. From its 52-week high, the stock is down about 23.18%. Even after the crazy run-up it's had right now. Some recent news about Trade Desk. On June 16th of 2021, Trade Desk launches in India to unleash the full potential of the open internet for digital markets. And I do believe this is huge news for the company, and I can see why investors are excited. This is one of the biggest population base in the world. And if we take a look at their most recent earnings, which they reported May 10th of 2021, this company reported 37% year-over-year revenue growth compared to the same time last year. Let's take a quick look at their fundamentals. Analysts believe this company will grow 23.9% on average for the next 3 to 5 years. The company is profitable in GAAP earnings, and they're also super positive in cash flow from operations. If we take a quick look at their balance sheet, they have no debt and they have about $680 million in cash and short-term investments. These are the type of fundamentals you want to have, especially when we have talks of higher interest rates. Fundamentally, they're looking great right now. If we take a quick look at Pubmatic, this is traded under the Nasdaq at ticker PUBM. Right now, this is a market cap of about $1.92 billion, so super small. And from its 52-week high, this stock has kind of gone down about 44%, a bit more of a correction from trade desks like we saw. Some recent news about Pubmatic is they are positive in adjusted EBITDA, 14.5 million, and their revenue grew 54% compared to the same time last year. We take a look at future growth. This company is expected to grow 18.8% on average for the next 3 to 5 years. So another hyper growth stock. They are GAAP profitable and they're also positive in cash flow from operations. If we take a quick look at their balance sheet, very similar, no debt and about $110 million in cash and short-term investments. At the end, I am going to take a closer look at what I believe are some of the biggest risks for these three companies. But next, let's take a quick look at Magnite. This is traded under the Nasdaq as ticker MGNI. It currently has a market cap of $4.5 billion. We can see both Pubmatic and Magnite are super small. Even adding them up together, they're nowhere near half the size of Trade Desk. From its 52-week high, Magnite is down about 42.9%. So it also has seen a crazy pullback. In the past few weeks, they have made some partnerships. First, on June 9th of 2021, they kind of had made a partnership with TV Scientific. The initiative will help CTV publishers reach a new class of first-time TV buyers that value data-driven capabilities and brand safety. And we can also see on June 2nd of 2021, Rakuten advertisement brings on Magnite to further monetize Rakuten's TV inventory across Europe. So both these recent press releases are great partnerships, just showing off the overall strength for Magnite and just the online advertisement company as a whole. From their most recent earnings, which they reported May 10th of 2021, the company reported 67% year-over-year revenue growth. And again, this is another company that is profitable in adjusted EBITDA. If we take a quick look at fundamentals, they are expected to grow 27.9% on average for the next 3 to 5 years. Unfortunately, if we take a look at GAAP earnings, Magnite is not there, unlike the other ones, and they're not positive in cash flow from operations at the moment, but should be expected to do that within the next 12 months. If we take a look at their financial health, right now, Magnite is not looking as strong as the other ones. They have about $486 million in cash and short-term investments and about $388 million in debt. So I do want to say Magnite, one of the major things in their fundamentals is they're not positive in cash flow from operations at the moment, and their balance sheet could definitely use some work. All right, so now let's take a quick look at technicals. I just want to make sure they're not too crazily overextended. If we start off with Trade Desk, we can see this pull-up has definitely made this stock a bit overextended. The only thing this tells me is there is a little bit more risk of a pull down right now. It doesn't mean it's a guaranteed, it just means the risk is higher. If we take a look at Pubmatic is not too overextended from a short-term moving average, so that's good. Obviously, the huge volatility move right now can continue, and we can see some of a pullback after a 10% day, but overall not overextended. Magnite, same way. I could expect huge volatility on this stock after an 8-9% day, but we can see the stock is not overextended from its moving averages. Now I wanted to take a look at these companies' forward price to sales ratio. So we can see first, they're starting off with Trade Desk. This is the most expensive out of the three by crazy levels, right? 24 for Trade Desk, where both Magnite and Pubmatic are sitting below 10. I do want to say, right, Trade Desk is a more mature company. Trade Desk also has higher profit margins. Their profit margins are about 7.8, where Magnite is at 65 and Pubmatic is about 73.47. I understand. I can see why it's a bit expensive, but I do want to say it's now kind of sitting where it's been in earlier of 2021. And even though it's seen quite a correction, it's still sitting at levels higher than 2020. So I do believe all these companies might be a bit overextended in valuation metrics. That doesn't mean that they're a bad investment. That doesn't mean that the stock price can't continue to go up. It's just that the risk of them seeing quite a pull down is a little bit higher. To me, this is funny, right? I think right now my least favorite in everything we saw would be Magnite. My favorite would either be Trade Desk or Pubmatic. Maybe Pubmatic just because it's the smallest one and still has very strong fundamentals in it and strong growth. So that's it for today's episode. I hope you guys enjoyed it. I hope you guys learned something. Take care, see you next time, and peace out.